Today's video is a little different than our typical video. This video is going to be more of a show type of feel. I've got 3 major stories lined up for you. Google's CEO shared his concern about this current market in a recent interview. Then we're going to dive into what's behind the recent drop in Bitcoin. And it's something every investor needs to hear. And then to top it all off, we've got one of the world's biggest stocks under the microscope. And the reports that we're looking at could spell trouble for the stock if it's true. And I believe a lot of you watching right now could own this stock. So let's start out with this Google story. This is a recent interview with Sundar Pichai, the CEO of Google's parent company, Alphabet. The headline, Google boss says $1 trillion AI investment boom has elements of irrationality. Now, that's not coming from some YouTube finance guru or some TikTok trader hyping the next AI penny stock or altcoin. That's from the guy running one of the biggest and most powerful tech companies on the planet, a direct recipient of this AI boom. So what is he saying? Basically this: yes, AI is exciting. Yes, it's a game changer. But let's be honest, there's a little craziness going on right now. Sound familiar? It should. Pichai goes on to say that this smells a lot like the dot-com boom all over again. Back then, everyone thought the internet was going to change the world, and guess what? It absolutely did. What are the things you do today that do not involve the internet? How much time do you spend on your phone that's all the internet? But they forgot to ask the most important question back then, and I think it's the question they're not asking today. Are we paying the right price for this? Is there a price that's too high? This is the difference between investors and speculators. Investors realize that something could be amazing, could be the best story ever. But if you pay the wrong price, you're going to make a bad investment. This is what I teach. It's not about whether AI will be big. It's already big, and I can't imagine a world in which it does not get bigger. But the question is, are we investing intelligently, or are we just throwing money at buzzwords and speculating? Pichai also admits that no company is immune if this bubble pops. His exact quote is this: I think no company is going to be immune, including us. Here's what else the article said. AI has raised fears that stock markets are heading for a repeat of the dot-com boom and bust of the late 90s. This saw the values of early internet companies surge amid a wave of optimism for what was then a new technology, a world-changing technology, before the bubble burst in March of 2000. And many companies went to zero. The tech-heavy NASDAQ fell over 80% over the next 2 or 3 years. This led a lot of companies to go bust, resulting in massive job losses. And guys, a drop in share prices can also hit the value of people's savings. And it's especially worrisome today because how many people invest in ETFs? If they get scared and start selling those ETFs, there will be indiscriminate selling across all companies. Because when you sell an ETF, just like when you buy an ETF, they're going to be forced to sell all the companies in those ETFs. In comments echoing those made by US Fed Chair Alan Greenspan back in 1996, warning of irrational exuberance in the market well ahead of the dot-com crash, 1996 versus 2000. Mr. Pichai said the industry can overshoot in investment cycles like this. He says, we can look back at the internet right now. There was clearly a lot of excess investment, but none of us would question whether the internet was profound. I expect AI to be the same. So I think it's both rational, and there are elements of irrationality through a moment like this. Guys, Amazon fell 96% from its peak in 2000 down to its low. But Amazon's fundamentals along the way kept getting better and better. Now his comments follow a warning from Jamie Dimon, the boss of JP Morgan, who told the BBC last month that investment in AI would pay off, but some of the money poured into the industry would probably be lost. That's the way it works, guys. That's the way it works in tech startups. You sit there and invest in 10 companies, 7 go bust, 2 do okay, and your returns are driven by 1 company. Guys, Alphabet's got a ton going for it. They build their own AI chips. They've got YouTube. They've got massive data. They're not just riding the AI wave. They're trying to steer it. But that doesn't mean the price of the stock can't get ahead of itself. This is why I always preach, and I will never stop preaching, price versus value. Hype can lift prices, but it can't change reality. If you're a long-term investor, you need to ask, am I buying a great business at a great price? Or am I just afraid of missing out? Do I have FOMO? Because when a CEO said that the market is getting a little irrational, especially one inside the storm, you better listen. You better believe, guys, that if we have a tech crash, Google's stock price will probably fall well over 50%. Probably worse than the overall S&P, just like Nvidia and the other great companies. It doesn't make them bad companies. Now, my second topic, my favorite thing in the world, Bitcoin. Guys, I want to tell you something. Just this morning, I was scrolling on Twitter, and I saw so many people talking about the Bitcoin fall in price. Now, first off, Robert Kiyosaki sold all of his Bitcoin to invest in other businesses. So once it fell, he stole his Bitcoin. His justification was, well, I'm using it to buy these other businesses that are generating cash flow, and I'm going to use that cash flow to go buy more Bitcoin. Robert Kiyosaki, you're a douchebag. But second, I love when I see people say, now I understand Bitcoin. Now I get it. You know what that's like to me? It's like when I hear people out there saying, I'm really smart. I'm a hard worker. If you have to tell us that you understand something, it's probably because you feel you don't understand it. Guys, anybody who says they understand Bitcoin, their logic goes to, it's finite, it has limited capacity, a limited supply. Okay, cool. So anything with limited supply means it's worth a lot of money. The example I always give, I take a shit in a bag, put it in the middle of the street and say, that's the only shit from Paul Gabriel in the entire world that obviously is worth a lot of money. No, we have to have use for it. We have to have a desire to have it. And right now we do have a desire to have it. But where's that use coming from? People say, oh, you can use it to buy stuff. I've not heard people using Bitcoin on a day-to-day basis. Guys, I pass ATMs all the time. You know what I do? I see people pulling out money. I see those Bitcoin ATMs. I don't see people doing it. Now, you might sit there and say, well, Paul, Bitcoin has not been accepted like cash. I get that. I understand that. But if Bitcoin got accepted like cash, what would that mean? Why would the US government allow that? Remember, Bitcoin's goal was to be deregulated. Why would the US government say, you know, we're going to adopt this crypto and we're going to allow it to be deregulated? That makes zero sense. Guys, Bitcoin is down a lot. Is this on its way up to new highs? Maybe. Is it just a temporary drop like they talk about on these stupid little, tweets about like, oh, I understand Bitcoin. And, somebody said recently on a tweet, they said something like, once you understand Bitcoin, you'll realize that every time it falls, it's a buying opportunity. Does that sound familiar? Guys, I don't know what the future of Bitcoin is going to hold. It could very well end up being some sort of currency for the world. But this highly volatile asset that basically moves right in tandem with the NASDAQ, it's not what it is. It's not what people think it is right now. If you think it's some sort of investment asset, you're not an investor. I'm sorry. I literally don't know a single investor that I respect that has a decades and decades long track record, both of those things, that supports Bitcoin. Now, do I see bankers who made fun of it, who provide products in Bitcoin? Of course they do. Guess why? They're capitalists. And they see a bunch of people out there wanting to buy this. They're not going to sit there and lose them as customers. They're going to say, fine, we'll sell you Bitcoin. Go for it. But in terms of it being an asset for investment, how does it make money? Guys, if Bitcoin went away, if the market for Bitcoin went away tomorrow and you had a Bitcoin, how would you use it in the future? You can't. You might sit there and say, well, Paul, how's that different than gold? I agree with you. I don't think gold itself is an investment. However, at least with gold, I can make jewelry. It can be used in products. It's used in electrical, all these other uses that gold actually has. But I don't invest in gold because it's specifically a speculative play. Do I invest in gold miners? Absolutely. They pull gold out of the earth. They sit there, they refine it, they send it out there for the world to use. More power to them. Now, let's shift gears to something that's definitely making noise over the past 2 years. The great company called Nvidia. Famed short seller Michael Burry just shorted Nvidia. He warns of suspicious revenue recognition after Nvidia earnings. Now, guys, remember, Michael Burry, before the real estate crisis happened, that made him famous, was an incredible stock picker. He recently closed his fund. Why? Because he sat there and said, the market and I don't agree on value. Now, what he's saying here is he doesn't like the fact that Nvidia is investing billions of dollars into companies, and in exchange, those companies are buying chips from Nvidia. Basically, it seems like they're creating their own demand. I fully understand that logic. I'm not trying to sit there and say that Nvidia is a scam. I look at it saying, okay, if I'm Nvidia and I'm going to invest in a business, is my incentive, is my motivation for doing that to get more revenue? So taking my own cash pile and generating revenue for myself? Yeah, maybe. That does make, that's their goal, to just hype up their investment, that is not good. Now, if I'm McDonald's and I go buy a company that makes our hot dog buns as a way of investing in it so I can make some of that upside, is that unethical? I don't know. This is where I'm sitting there trying to juggle these going, where is the gray area? Where is the black? Where is the white? I don't understand, because I look at it. If McDonald's came tomorrow and said, hey, our largest manufacturer of hamburger buns also supplies 30 other chains for hamburger buns. We're going to go invest in them. In exchange, they're still going to buy more from us and solidify the contract. I don't know if that's necessarily a bad thing. So this is more on this topic. Nvidia's latest AI partnership with Microsoft and Anthropic underscores the chip maker's torrid pace of deal making this year. Nvidia invested $23.7 billion in firms in the space through 59 deals between the start of 2025 and Monday. For the entirety of 2024, they did 54 deals worth $22.8 billion. Now, I will say this. It's not that much higher. We're not talking about like it's June and they've already done the same amount as last year. It's higher, and they've got a lot of cash. So I guess I don't blame them for investing. Now, one thing that did make me go, was this article with our good friend Jensen from Nvidia. He actually said, we're not in an AI bubble. Based on his perspective, we're not in an AI bubble. Whenever you're hearing somebody, you've got to question, where is their incentive? Even Burry. Burry shorted Palantir. He shorted Nvidia recently. Now, the question is, did he short them because he believes that? Or does he say it because he has a short position on it and wants to sit there and push that short? I think he shorted them because he believes that. That's the difference. Now, Jensen, unlike Google's CEO, is coming out and saying, from our perspective, we have no bubble. Very well could be the case. Maybe he knows a lot about demand in the past and in the future and what he's seeing and all this stuff. Our in-house analyst, Dalton, he looks at the accounts receivable. He thinks that Nvidia he's been saying this before Burry came out and said it. He's been telling me, Paul, I think there's some questionable financial accounting things that Nvidia is doing. Now, here's my issue with this. And this is what I'll pull up with Nvidia that makes me go, okay, let's figure this out. Whenever there's a discrepancy between cash flow and net income, where cash flow is significantly lower than net income, you got to ask questions. If you look right here, last year's free cash flow was $77 billion. Last year's net income was $100 billion. Big difference. 5-year net income, $39 billion. 5-year free cash flow, $33 billion. So it's not as big a difference between these. Now, what drives free cash flow? Well, it's cash from operations less your capital expenditures. So they suddenly invested a lot in capital expenditures and really increased it. That would explain it. So let's take a look and see if they really increased it. First, we're going to go to the income statement. In the last 12 months, they've done $187 billion in revenue. Now, I'm going to go to the cash flow statement, where I'm going to look at how much they did in capital expenditures. Well, I kind of am starting to understand this comment. Only $5.8 billion. Previous years, $1 billion, $1.8 billion, $1 billion, $3.2. Their capital expenditures are not up by $20, $30 billion. This is what makes me go, hang on a second. What is going on here? That makes me have pause. Now, I'm not calling Nvidia Enron. Please don't take it as that. But people who followed Enron in the early 2000s who realized it was a fraud said there was a difference. Their free cash flow and net income were 10x difference. This is not 10 times difference. But it does cause concerns for me when I see capital expenditures. Yeah, it's up 5x, but I look at this going, it's only $3.5 billion or $4 billion. But yet the discrepancy between free cash flow and net income is quite sizable. That is a problem. So now, this is where we have to do our homework. Is the current price of Nvidia justified based on fundamentals? Or is it driven by hype? Is it driven by the demand that Nvidia is creating of its own products? We need to look at the difference between price and value. Remember, guys, price is going to jump up and down like crazy. It's just the market price. Value is more consistent. It grows slowly over time. So let's go back to the main page here. First off, $4.4 trillion company, $4.4 trillion enterprise value. What this means essentially is zero debt. Now, that's a good thing. We can't deny that's a great thing. There is no manipulation there. These are all just, unless they're hiding debt off the books, which Enron did, but if they have debt off the books, that's the only way to know about this one. Profit margin, 53%. Gross profit, 70%. This last quarter, their gross profit was pushing 75%. What does that mean? It means every product they sell is 75% profit margin. That's pretty solid. That goes to the profit before overhead and taxes. So these are amazing numbers, guys. Amazing numbers. Look at this growth rate, guys. 3-year revenue growth, 87%. 5-year, 66%. 10-year, 44%. How often do you see a multi-trillion-dollar company where revenue growth is increasing? Man, I can't believe I never looked at that free cash flow number. That makes me really go, wait a second, what is going on there? I thought their free cash flow, their capital expenditures were much higher than that. Guys, I'm really glad. This is why we do this, because I want people to see this is the thing you have to think about. It's not just about looking at it and trusting that that's the case. This is massively different than this. To have a $22 billion difference between free cash flow and net income, but only see $5.8 billion in capital expenditures total, something's not adding up there. So what they might be doing is what Michael Burry says. They're recognizing revenue a lot faster than they should, which would inflate their net income, but the cash hasn't come in yet. That could be the issue. The question is that reasonable or not? Well, guys, everybody on Wall Street knows everybody looks at net income, but us as principle-driven investors, we like to look at free cash flow especially. So here's what happened with Enron back in the, guys, I have to repeat, I'm not saying it's Enron, but there's a lot to be learned from the Enron situation. If they did a deal that was going to make them $1 billion over the next 20 years, some sort of trade on oil, they would sit there and recognize that $1 billion today. That was the problem they had. That's why free cash flow and net income are very different. And guys, let me make a comment about this as well. Let's say that this isn't true. Let's say everything's all good. Do you see how the mood is shifting on Nvidia? Isn't that interesting to you? You should look at that and say, wait a second, what is going on here? Why is the mood shifting on Nvidia? Guys, nothing stays popular forever. Even the best companies are going to lose popularity at some point. If this ends up being true, there are going to be problems. So let's look at the 8 pillars here. Now, guys, 8 pillars are a great 500-foot view to sit there and see what questions we have. Well, high returns on capital, that's awesome. That means they get really good returns on the money they invest in the business. Shares outstanding are down. Not necessarily a good thing, not necessarily a bad thing. It just depends on what price you're paying. When you buy back your shares, if you're buying back expensive shares, you're doing your investors a disservice. Cash flow is up, net income is up, revenue is up. But here's the same thing. Net income's up $95 billion over the last 5 years. Cash flow is only up $73 billion. Low debt. It's these big metrics on the 5-year PE and 5-year price of free cash flow. But remember, their cash flow and their net income are up significantly over the last 5 years. So I'm not focused on these numbers. The question is, are these sustainable numbers? Is the $77 billion in free cash flow the bottom line they're going to do, and it's going to grow from here? If it's temporary because of this AI boom, you've got to factor it's even more expensive than it's letting on. These are the questions that investors need to ask. Now remember, if you're new to this channel and this feels overwhelming, you're not alone. I'm here to simplify this as much as possible. And I will tell you, this stuff didn't make sense to me when I first learned it. I'm teaching on YouTube for that exact reason. I want people out there to become investors, not speculators. I want people to feel better at night when they go to bed and the market is down because they know what they're buying. I don't want you to be that Bitcoin hypester where all you rely on is price. I want you to be the person who buys a company and the price goes down. You say, I know what I bought. I bought a great business at a great price. I'm going to buy more. That's what I'm hoping for you to do. And in a couple of minutes, I'm going to go over what price I think is correct for Nvidia. But before we get there, let's look at our analyst estimates here. Now, remember, you might sit there and say, well, analysts are smart. No, not necessarily. Analysts all were giving buy ratings on stupid stocks for all of time. They have their own personal bias, so remember that when going through. But it's a nice place to look there and say, what do analysts think? Guys, analysts think that Nvidia's profit's going to triple in the next 5 years. That's a lot. That's some big growth here, but it's slowing. As for revenue, they have revenue going from $210 billion from March of 2026 to $390 billion in 2029. That's some big growth as well. 60, 33, 16, 10% growth. So now we're at the stage, and usually, guys, I do it sooner. I tell everybody who has Stock Analyzer tool in our community, use it to start. Put in some assumptions, see if the stock's even remotely close to where you need it to be. Because why go waste your time in doing more research if the company isn't anywhere close to the right price? That's the big key. Nvidia is currently selling for $181 a share. If we do the Stock Analyzer and hypothetically comes up to $20 a share, why spend any more time? It doesn't make any sense. Don't fall in love with the story. Fall in love with the numbers. So let's pull up Nvidia the last time I did it. Now remember, guys, because of what I said earlier, I'm going to focus on free cash flow. All right, guys, so here's a Stock Analyzer tool. I'm doing a 10-year analysis here. First up, revenue growth. Now, guys, revenue growth has been insane, but it can't do that forever. So I sat here and put 10, 15, and 25% revenue growth. Remember, I'm factoring things in like a major slowdown in AI. I'm factoring in a lull of it. Maybe it drops on revenue growth. I don't look at electric vehicles. Nobody would thought electric vehicles would have decreased in sales, and how many companies now are saying, you know what, we're pulling back our electric vehicle investment. We're pulling back our electric vehicle assumptions. That kind of comment did not exist as recently as 2 or 3 years ago. Moods shift. You have to remember that. Don't assume all the rosiest of assumptions. So I did 10, 15, and 25% revenue growth for the next 10 years. Now remember, we're focused on free cash flow here. I did 35, 45, and 55. I'm actually going to change that. I'm going to change it to 35, 40, and 50. PE, price of free cash flow. What is the right price of free cash flow for 10 years from now, not today? Well, great. The market average is 15 to 16. You should pay higher for great companies, lower for bad companies. The question is this a great company or a bad company? Well, even though there are questionable accounting things happening, their free cash flow, which is harder to manipulate, is still growing strong. So I would still give this, especially with this increasing returns on capital, I would still give this great company status. So I put in 18, 22, and 28. And finally, my desired return, I put in 9%. Now, guys, remember, 9% is the market return over long periods of time. You're not in this to buy the market return. You need this to buy much better companies at great prices. You need to have a margin of safety, especially with these questionable accounting things going on. But I'm putting the 9% return in to assume everything is fine. What is the company worth? Guys, I have felt that panic in my gut as well. When stocks fall, fear takes over. You start thinking, do I sell before it gets worse? I've been there. I've made those emotional decisions and I paid heavily for them. But patience and planning are what separates principle-driven investors from degenerate gamblers. Once you understand value and how to determine it, your perspective completely transforms. Price drops become golden opportunities, not disasters. That's what we teach at Everything Money. How to think long-term and stay calm when other investors start losing their minds and they dig holes that kneecap their financial future. Get access to the tools and the knowledge that protect your portfolio and your future from those emotional decisions that will destroy wealth. Start your 7-day trial right now. So guys, with these assumptions, I hit the Analyze button. I scroll down. So based on free cash flow, I have a low price of 78, high price of 493, middle price of 150. So guys, what this is saying is if the middle assumptions all occur based on a discounted cash flow model, your return's going to be 6.8% per year over the next 10 years. Is that reasonable for you? Great company, great story, all the things, everything works out. They weren't manipulating numbers. Is 6.8% enough for you? That's the question. Now, if you're serious about becoming a better investor, it comes down to 2 skills: knowing how to value a business and having the emotional capacity to be able to handle the ups and downs of the market. Prices are always going to jump around. That's just what the market does. But value is steady. And once you know how to calculate it, the noise will shake you much less. So in this next video, I'm going to show you exactly how I value a company step by step. You're going to learn what to look for, what to avoid, and how to protect yourself from overpaying for hype. The link is right here on your screen, so click it. I will see you there. Thank you for your time.